So, all right, Cardinal Financial. I think this might be your first time experiencing Cardinal.
Let's make it a good one.
Yeah, not as easy as UWM. UWM makes the loan disclosing process very easy. So Cardinal is a little more of a beast here. So I already have the 3.2 downloaded because we did that when we went to UWM. So if you guys want to see Lending Pad, I have it pulled up here. We can just go over it. All right, so now I'm going to delete this other 3.2 that we have, and I'm going to download a new one since we updated the REO section.
Okay.
So I'm in downloads. Make sure you cut it from your downloads and place it into the proper folder. Paste that there. All right, so now we're going to go into Cardinal Financial. Cardinal Financial. All right, Cardinal Financial home screen. To add a loan, this is what you would see once you log in. If you wanted to look at all your loans, you can go up here or search or click on the recent, and this is the recent loans that I've looked at, but we're not going to do that right now. So we're going to go to add loan. My role is going to be the transaction coordinator. Compensation, we're going to go lender paid, fee and price. And then our servicer is going to be Equifax Mortgage. And then always keep this as a no for important liabilities because that's going to happen when we pull in the credit report, and I'll show you how to do that momentarily. All right, so now I have the G drive open. So we're just going to take the 3.2 and we're going to drag it and drop it right there. You could either do that or click on it and then just click whatever file in whatever G drive, however you want to do it, what's easiest for you. All right, so you missed the part where I completely upload the 3.2. This is the screen it takes you to. This is the new loan. All right, so this is where we're at. We're in. All right, so the first thing we want to do is go to borrowers and then click on. So you need a cell phone number in there. So we'll put in her cell phone number in the actual mobile phone section, and that's going to come up important here in a little bit. And then we need to make sure her email is correct and she has no dependents. So that's all set. So now we're good. So we're going to save this. One thing that you got to remember in Cardinal Financial is anytime that you do anything on any screen, make sure you hit the save button. Because if you leave that screen and don't save it, anything that you just updated will not be in there. But that makes sense, right? If there's a save button on the bottom of it, use the save button. Now we're going to authorize her credit report. You have to do this if you're going to pull in her credit or even run credit inside of Cardinal. So if you go try to upload her credit report without doing this, it's going to give you this big error that says, hey, she hasn't given authorization yet. Please make sure you do it. So authorization obtained, yes. We did it via phone, and we're going to set that and then hit save. Now we're going to go to the credit tab. Down at the bottom here, you got two buttons, a save button and a request credit. So we're going to request it. Request new, click on her name, click on options, and then it's going to have your drop-down menu of, all the different credit bureaus or credit agencies that we use. We already selected that we had Equifax, so it's automatically going to populate that, but if you want to change it, you can. Equifax, we're going to reissue it. You don't want to merge it. If you do a merge, what that means is it's Cardinal Financial. We're going to pull a credit report through Cardinal Financial, through Equifax, and it's going to charge us another $31. We don't want to do that. We already have a credit report on her. We don't need to go do another report. So I'm going to get her credit report number from Lending Pad, and I'm going to put it right there and then hit submit. Now it's going to take a few seconds, and then it's going to say that it's done. You'll know that it's done because her credit report will populate up here under the FICO. One thing that you'll learn about Cardinal Financial is nothing in their system is fast. Nothing. So now the credit report shows. All right, so now we're going to go price out this loan. That's the next step, because right now, until we price it out and have an actual program such as VA, conventional, FHA, we can't really move forward. So we're going to go price it out. So to price it out, you go to terms, and then we're going to verify that this is right. So she doesn't want a cash out, right? She wants a rate and term.
That's correct. Cash, rate and term.
Yep. So we're going to change that to rate and term, and then we're going to click on get rates and hit save, because I changed something and didn't hit save. So this is a conventional 15-year. So we're going to take off the 30 and go to 15, conventional 15-year loan, and we're going to hit find rates. And hopefully their pricing engine is up and running. And it is. All right, so here we are. We'll select that and then come down to the bottom and click choose selected. And then you'll notice up at the top of the screen here, everything's going to change. The program, the rate's going to come in there. The APR is going to come in. The monthly payment's going to change. All that stuff's going to change. So boom, so 3.5, Freddie Mac, mortgage payment, and we'll move forward. All right, so next thing I like to do is come down to transaction, early first payment, no, and enable e-transaction, yes. That gives them the ability to go in and e-sign all their documents instead of sending it directly to them in this big package via the mail. So closing date right now is set for May 1st. What we'll do is we'll come down here and we'll just move it to April 30th. That'll save her a lot of money on the back end for days interest. And we'll hit save. And then you'll notice that cash is going to change a little bit there, but we also have to go in and change some things. All right, so now that we have this set up, what we're going to do is make sure that we're paying off the right loans, because that does not come over from LendingPad properly. So we'll go into credit, go into liabilities, and then we're paying off, correct?
Correct.
So we'll go into, we'll associate it with the property, which is, so we'll associate that, and then we'll come over to disposition, and we'll say pay off at closing. So now that's going to set up this whole other bottom of the screen, but we'll get there momentarily. So now she's paying off this, so we're going to hit save. And then watch the cash to close change. So now it says she owes. Well, we know that's not right, because we know that her payoff is actually lower than this $85,000, but we don't have the exact payoff yet. So the system's only showing what's paying off via the credit report, not her payoff.
Right.
So that's going to change as we move forward and get the payoff, and then the numbers become tighter. And that's just something that she's going to have to be aware of as well. All right, so we'll hit save there to make sure I did it. Now we'll come back into liabilities. We'll go to SPS, and we'll associate it with, just to make sure that we have everything set up properly. Okay, so now
and we're back.
We just need to have this with an address. All right, so what we're going to do now is, normally at this point in the process, I'm going to start working all the critical errors. So Cardinal Financial gives you two types of errors: critical errors and warnings. The warnings you can not deal with or deal with at your leisure. The critical steps have to be completed before you can move on to the next step. And the next step in this is disclosures. We would not be able to move on with disclosures until the criticals are taken care of. Since the WCA has not been assigned yet, we can't, I can't see the errors until that's taken care of. So what I'll do is I'll just work what I know the errors are going to be until we get to the error section, and then we can go back. All right. So the first thing we're going to do is go back to borrowers, go to And since this is not a government loan, we don't have to worry about government data. If this was an FHA, USDA, VA, there would be a government data block here that we would have to fix. But since this isn't one, we don't have to worry about that. But we do need to do tax filing. So go to tax filing. She's unmarried, so we'll do single. And we'll go to her address is where she's doing it. And they need this filled in. So if one thing that you run into in Cardinal Financial is if they're married and the borrower's spouse isn't on the loan, it's going to give you an error saying, please input the borrower's spouse information here, and then you're going to need that information to input it. But since she's single, it's very easy. You just put single in, then come down here and make sure you hit save. All right, so the next section we're going to work in is credit. We're going to go to inquiries. And she only has one inquiry, so this is very, very easy. If she had multiple inquiries, I'm going to let you know what you have to do. So the first thing you have to do is open up her credit report and verify that whatever inquiry is there, is it on the credit report or is it not on the credit report? If it's on the credit report, you have to say as such. So what we'll do is, these are all the options you have. Account open is on credit report. Account open but not on credit report. You have all these different options. For home loans, we know that that's not on her credit report yet, right? It's just an inquiry. We'll never actually go onto the credit report as a liability since we're just the broker. It would be the actual lender. So we know that Home Loans Inc. is not going to be a liability on her credit report. So that's an easy one. So you come down here and say inquiry did not result in open account. And then it says provide the purpose and type of credit. So this was house refi. And then move on smartly. You get ones where I think the most I've ever seen on a credit report inquiry-wise is about 15. And then you've got to search each one of those 15 inquiries and then update the credit as such. But this one was easy. She only had one. So boom. We'll save that. All right, the next section we're going to work in is the section for LOs that are processing their own file. This section here is the make or break of what is going to kill a loan. So charges and credits is the LE for Cardinal Financial. So if you input this stuff improperly when you're disclosing the loans and you disclose it too low and it's actually higher, well, then we're going to eat that, that difference, right? If you disclose a little higher, that's fine, right? Because then the difference just gets made up and nobody has to worry about the money in between. But if it's low, you have to make that up via your commission. So your commission check would be lower. So we'll just go down via each section. Section A is the origination charges. Really the only things that should be in there is your broker comp, how much you're getting paid. And if there's a charge for the interest rate, which on this loan there was, $1,600. So that's all that should be in there. Section B, borrower cannot shop for. So appraisal, paid outside of closing. That's what this little checkbox means here, paid outside of closing. For all loans minus VA, this should be checked. And you can't go just check them. You have to undo it, and I can show you how to do that. But all loans besides VA, that checkbox should be there, so she's paying it outside of closing. All right, so now we're going to get rid of the credit report fee because we're not charging the borrower $100 for the credit report. So what we're going to do is disable it and hit save. And this is very time consuming. This is one of the things that slows everybody down in disclosing in Cardinal is the charges and credit screen. All right, so now it's disabled. So what I'm going to do is I'm going to go through and disable, actually, you know what, I'm not. So we're going to add that charge back in. So I'm going to go to charges, go to credit report fee, and I'm going to put $31 in because that's how much an Equifax credit report costs, and put Equifax there and hit save. So now once this screen refreshes, you see that the original credit report is no longer in there and our credit report is in there at $31. So this D means I deleted that report. This M means that I manually input it. That's what those M's right there down there. Disabled, manually, and then E is automatic charge with edited values. So those come into play with taxes when we get to the taxes section. All right, so section C is the attorney fees, and this is stuff that they can shop for, right? So we know what the fees are going to be because she's using cooperative title. So what we're going to do is I'm going to delete all these, and then we're going to input cooperative titles fees into this. And this is what I said with the time consuming part, because it's a lot of deleting and then going back through and finding the actual fees to go in there. All right, so now we got section C all completely filled in. Now we're going to go into hazard insurance. So the way to update this is you can't just click on it and update the months. It doesn't allow you to do that. So go to property insurance. In escrow, yes. So this is only her policy just renewed on, so her next policy is, and her next payment is, everyone hit save. So for refis, it's always good to have all this documentation when you're setting up the loan so that you have the most accurate data when you're inputting it. So now we'll go back to charges, and we come down here, and it shows that we're collecting 11 months up front, and county property taxes are not, there's no way that they're that much. So let's go up to taxes on the top. Automatic, no. We're going to put 1556.76 in as what it is. So this is the annual amount. I'm pointing and you guys can't see. This is the annual amount, and then this is the payments, right? If these two don't match, you're going to get an error and you're not going to be able to save it. You could split it up to where it pays it over this many months, but that's not how we do it in South Carolina, right? It gets all paid out in one lump sum at some point in the year, normally the beginning or the end. So that's the way to set up. So now we're going to hit save. So now we're going to go back to charges. And now this number makes sense, and that mortgage payment makes a little more sense comparatively to what was in it before. Right, so it's kind of hard to compare. Is this going from a 30-year to a 15?
Yes.
Yeah, so it's going to be hard to compare apples to oranges on this one because her other mortgage payment was $800.
Right.
It's now $1,007, but we're shrinking it in half.
Right.
So that makes sense to me. That $1,000 makes sense, right?
Right.
Right.
So. All right, so all that's good. Any questions on charges and credits in Cardinal Financial? Now's the time to ask because we'll have this recorded and other people might have the same questions. So one of the questions that posted on the messenger board yesterday is, if I wanted to go add flood insurance to Cardinal Financial, how would I go do that, right?
Okay.
So if you just go to property insurance, there's no place for you to click to add flood, right? So what you have to do is go escrow selection. Then if there's flood on here, you hit yes, hit save, and then you go back to property insurance and input the flood value, right? That makes sense. It's not going to be intuitive enough to say, oh, this house has flood. Does this house have flood?
No.
All right, so no, no, no. And then we'll hit save. And boom. So now that part of charges and credits are done. The next part is the anti-steering. So the best way to do this is to go to terms, get rates, find rates. So what I'm going to do is I'm just going to take a screenshot of this section here, and I'm going to move it over to the other screen, but I'll bring it over again when I'm inputting the stuff. So now I'm going to go back to charges and credits, anti-steering, the loan with the lowest interest rate. So the loan with the lowest interest rate is 2375. So that's what we'll put in there. 2.375 cost served. Loan with the lowest interest rate without negative amortization, a prepayment penalty, interest only payment, a balloon payment, blah blah blah. So that's the same thing because we're not doing an ARM. There's no negative amortization. There's anything of that. So it's 2.375. Loan with the lowest total dollar amount for origination points or fees and discount points. So we'll bring this back over. We're at this one, right? But 4 1/8 only costs. So that's what we're going to put there. So 4.125. All right. Any questions on that?
So you pretty much always put the top and bottom top for the
right.
options.
So it could be. So you see how this one here. Let me change the color here. Let's go to a red pen. So this is where we're at, right? This number here.
Right.
This Cardinal does these weird plateaus on rates to where you would think that 3 1/2 would cost more than 4 1/8.
Right.
But for some reason, sometimes it doesn't. You might see it to where 4% is actually cheaper than 3.5%. It gets, so you just have to look at the numbers and the fees and figure out what's right. And in this market, who knows what a rate's going to cost? But yes, normally it is the highest and lowest.
Gotcha.
Question. All right, so we'll hit save again because I don't know if I did. All right, so now I have this screen, right? I have the criticals because the WCA was assigned. So now here's all my criticals. And we're just going to go down them and fix them as necessary. All right, so now I have no critical checks, but we're still not 100% done yet. So what I need to do is go run AUS, and we're going to submit to DU. Approved eligible. We'll submit to LP. All right. Let's keep chugging through to get this disclosed. All right. So review and confirm broker fees. All right. So now we're ready to disclose. We're going to complete the step. It's going to ask you, do you want to complete this and send the disclosures? We're going to hit yes. And now we got to give it a second to burp, if you will. So once we give it a second, you have to go to borrowers and then send this loan key. So we're going to hit this loan key and send a text. And now she has all the information she needs to sign those disclosures.
Okay.
So she has an email and now she has a text message with that loan key.